exposure to unique investment ideas and themes. Hello everyone. Yes, investing your money is very important if you want to achieve your financial goals. Don't you think you should look at investments that can give you inflation-beating returns over time? Well, if you are looking for a suitable investment to attain your long-term financial goals, you must watch this video. After all, it is not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it for, right? Hello and welcome. I am Prarthana from Clear, India's largest tax and financial services platform. At Clear, we have assisted 6 million plus tax filers so far. By the way, I have an exciting announcement for new subscribers. We have a free gift for you. We have curated 4 of our best calculators that will help you estimate the future cost of your financial goals as well as identify the lump sum you need to invest to reach those goals. To claim it, subscribe to our channel and let us know in the form that is provided in the description box below. The Mutual Fund House offers you an opportunity to invest in a new mutual fund scheme through the New Fund Officer or NFO. You can purchase units of a new mutual fund scheme through the NFO. In simple terms, NFO is similar to the initial public offering or IPO, where private companies offer their shares to the public for the first time. However, unlike IPOs which use funds they raise from the investors to expand the business or pay off dues, mutual fund houses use the money they pool from the investors through their NFOs to buy stocks, bonds, or other securities in line with the investment objectives of the mutual fund scheme. Well, wondering how does an NFO work? AMCs offer units of new mutual fund schemes through the NFO for a specified time. You have AMCs launching new mutual fund schemes at a net asset value or NAV of Rs 10 through the NFOs. You can buy units of the new mutual fund scheme even after the NFO period if it is an open-ended fund. However, the net asset value or the price of the units may be higher than the offer price. You can buy units of a close-ended mutual fund scheme launched through NFO only during the offer period. The AMC lists the units of the close-ended fund on the stock exchange and you can buy or sell units through this route after the offer period. And lastly, the AMC uses the money raised from the subscribers to invest in various securities and create the fund portfolio in line with the investment mandate. You can invest in NFOs either online or offline, depending on your convenience. Talking of the offline route to NFO, you could choose the offline route and invest in an NFO through your mutual fund broker. Your broker helps you complete all formalities such as filling up the relevant forms and submission of the documents when applying for the NFO. Moving on to the online route of investing, if you are already investing in shares and mutual funds, you could invest in NFOs through your online demat and trading account. You can also invest in NFOs through the mutual fund platforms where you can buy and sell units of the new mutual fund scheme from the comfort of your home.
You can invest in NFOs online in a jiffy through the Clear's Black app. All you have to do is download the Black app from the Google Play Store and invest. Open the Black app and you will immediately see a section called Invest in NFOs Live. Just press on this section and you will see the latest NFOs that are launched by the different AMCs that are currently open for investment. Simply touch the NFO that interests you to instantly check vital information such as offer price, last date to invest, launch date and allotment date. The risk, lock-in, exit load, expense ratio, fund manager, AMC and charges applied on mutual funds would be displayed to help you gauge the NFO in an instant. You can also study the AMC that has launched the NFO and the performance of the similar mutual funds before investing your money in the NFO. You can then press Invest Now and choose either the monthly SIP or the one-time option to commence your investment in the NFO. The minimum investment is displayed in both options and you will have to choose the investment date you opt for monthly SIP. You then have to choose the preferred payment options such as UPI or net banking to make the payment and invest in the NFO.
AMCs spend a lot of money in advertising and marketing campaigns for their NFOs. It actually increases the expense ratio of the new mutual fund scheme, which is the cost of managing the investment, thereby reducing your take-home return over time. Now, let us take a look at some important things you must know before investing in NFOs. Firstly, AMCs raise the money required to purchase stocks, bonds, or other securities in line with the fund's investment mandate through an NFO. Secondly, it means the AMCs has yet to construct the portfolio and you don't have a track record to measure the performance of the mutual fund scheme. It is better to gauge the performance of a new mutual fund scheme over a few market cycles against peers and of course the benchmark. You cannot do this with an NFO as it is a new mutual fund scheme without a track record of performance. Make sure you go through the Scheme Information Document or SID, which shows you the investment strategy, asset allocation pattern, fund manager profile and benchmark index. You must pay close attention to the investment thesis of the scheme, which shows you where the new mutual fund launched through NFO plans to invest your money. You may invest in the NFO of the new mutual fund scheme only if it offers you exposure to a new investment theme that has the potential to perform well over time. Here are some reasons why you should invest in an NFO. Firstly, invest in an NFO if you lack certain investments in your portfolio provided it matches your investment objectives and risk tolerance. For example, experts recommend having at least 10% of your equity portfolio in foreign stocks to spread your investment beyond the Indian stock market. Secondly, you could invest in the NFO of the mutual fund scheme such as an index fund that tracks the portfolio of a foreign stock market index like the Nasdaq 100 or S&P 500 if you don't have international funds in your portfolio. Many investors believe NFOs are cheap because they are generally launched at a price of Rs 10 and are perceived at a bargain investment. Sadly, there is no advantage even if you buy units of the new mutual fund scheme at Rs 10 through the NFO. Suppose you invest Rs 30,000 in two mutual fund schemes, Scheme A and Scheme B. Scheme A has been newly launched through the NFO at an NAV of Rs 10, while Scheme B has been in existence for the 5 years and has an NAV of Rs 30. You get 3,000 units in Scheme A as you have invested Rs 30,000 and NAV of Rs 10 and 1,000 in the case of Scheme B as you have Rs 30,000 as an NAV of Rs 30. Suppose you get the same returns of 20% over a year over the both mutual fund schemes A and B. Let us check gains from both of these schemes. As you can see from the table, the value of your investments and the gains that you make are same for both Scheme A and Scheme B. So, there is no real advantage even if you invest in NFOs at a price of Rs 10. Well, you can make listing gains in NFOs. Are you wondering that? Let me give you an answer. Many investors believe NFOs are an excellent opportunity to make listing gains similar to IPOs in shares. But here is how you make listing gains in IPOs. The shares of company launched through the IPO get listed on the stock exchange at a price called the listing price. The listing price may be higher or lower than the offer price, which is the price at which the IPO is first sold at the public. If the listing price is higher than the offer price because of high demand for shares, then investors can make profits called listing gains if they sell their shares. However, you can't make listing gains on NFOs. The AMC can create more units of this scheme to meet excess demands, if any, eradicating your chances of making listing gains. Well, you must invest in an NFO only if it offers a viable investment theme that could do well over time. Do not fall prey to the dazzling marketing campaigns of AMCs launching their NFOs. Invest in the NFO only if it matches your investment objectives and your risk tolerance. Receive some valuable information through this video? If yes, then do not forget to subscribe to our channel and of course to claim your free gift as well. We have curated 4 of our best calculators to help you estimate the future cost of your financial goals as well as identify the lump sum you need to invest in those goals. So subscribe to our channel and let us know in the form that is provided in the description box below. Thank you so much for watching the video. Stay tuned and take care.